We detected an unusual trade on Palantir stock today, May 6th, and what's also very unusual is that Palantir reports earnings today after hours when the market closes. And so in less than 30 minutes, we will find out if Palantir rallies or drops after earnings. So in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Palantir for earnings. Are they bullish or bearish? And then we will set up a trading strategy in the same direction as the rich to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked information, such as earnings reports, to make better financial decisions on Wall Street. So without further ado, let's get to the data that represents the trades of wealthier investors. As you can see here, these unusual options being traded, the most unusual of them all, these 2,165 today at 1:42 p.m. For the June 21st options, 24 strike puts and the 21 strike puts. We can see how much they paid, $180 for the 24 strike puts, and they sold the 21 strike puts for $70, so we subtract 70, so each trade costs $110. Since they did 2,165, we multiply that by that number of trades to get $238,000. So if you've been following our channel, you know that this amount is not so significant because we typically follow trades much higher, up to into the millions, okay, which then increases our chance of profit. So if you are interested in those $1 million trades, then make sure to go to our website where you can learn how to gain access to those. We'll put a link to our website at the top here. These trades that we share on our website are higher chance of profit because they are higher trade amounts and also other market variables that increase the chance that those trades will be winning trades. As you can see on this trade here, these 24 strike puts right here, the open interest was 13,000 here, and the 21 strike puts is 8,000. So these possibly could be closing trades. So that's another reason why this trade is a lower chance of profit trade in comparison to the ones that we share on our website. This trade, they were buying the 24 strike put and selling the 21 strike put. And as we mentioned, they were buying these for 110. And when we analyze this trade, you can see that this is a bearish short trade here with a negative delta. Okay. Now, because we are close to earnings too, and because some of the traders who trade earnings hedge their positions, this could be a hedging trade, right? Investors who have shares of Palantir who are actually long and bullish on the trade could actually be using these put options to hedge their position to protect the loss from their underlying shares. So what we mean by that is they could possibly have 100 shares for every one of these put option contracts. And so you can see that by analyzing both of these 100 shares of Palantir stock and these put options, essentially what it does is if Palantir drops for earnings, it minimizes their potential losses here. And that's what it does. You can see that if it was trading, let's say at $19, they would be at a loss negative $494. If they didn't have these put options at $19, they would have lost negative $618. You see, they would lose a lot more without these put options that hedge the position. So keep that in mind. This could be a hedge trade. The way we are trading it, okay, because of these factors, that could be making it a hedge trade. We also hedged our upside position in case Palantir does not drop. This is our trade. We have put side. You can see positions on the puts and also on the call side. We traded the May 10 options. They are the closest to expiration. And so what we did was for the 20 strike puts, we sold 2 of them for each of our trades. And then we bought the 22 strike puts and the 19 strike puts. Okay, so we can add this one in, and then we'll add our call side, which is our hedge at the 29 strike calls, 2 of them. And we bought the 30 strike calls, 1 of them, and one of the 27 strike calls. So when we add this up, you can see that this is our trade right here. But because the data of the unusual options that we just analyzed was bearish, what we did was we added another put contract. So we have a ratio here of 2 of these put trades for every one of our call trades. Okay, these are butterfly option spreads. Okay, that's the strategy we are using. You can see the cost of each of these put options trades, $25 each. Since we got 2, that's $50 plus the 86. So that is a total of $86. So the max loss on this trade, you can see the blue line here is minus 86. If we lose on this trade, the profit is showing on the corner over here. Okay, the blue line is the expiration profits. So 86 is what we're risking per trade. Okay, that's per trade. You can see if it drops, we could be profitable at max profit here, about $283 of profit per trade. If we go up, we can actually also be profitable. You can see here a max profit of about $110 per trade. Okay, so on either side, if we rally, we could be profitable. If we drop, we can also be profitable as well. And that's how we can reduce our risk if we trade a binary event such as earnings, where it could either go down a lot or up a lot. So the uncertainty, we want to take some of that uncertainty out and set up an options trade that is in our favor. And that is what we are doing here. If you want to learn more about how we set up option strategies and to pick the best stocks to trade, make sure to go to our website. Put a link at the top here, and let us know in the comments below what you think will happen to Palantir. Take care and have a great day.